Good morning, everybody. Let's get some charts up here. So the market's extended enough yet to have some type of a pullback? I think we'd all agree that yes, but can they become more extended is the real question. I wouldn't want to bet on that with going long at this point with this run up, of course. So market stalled on Friday, and you see the move up here in the NASDAQ futures. We did get the wide range bar there on Thursday, and then as they advance, pull back. The good part is that they've gone so far that they can pull back without doing any real damage. I mean, they could pull back a relatively significant amount if they begin to pull back here. Of course, they can go sideways. 1,600, 16,000 now being a whole number that it had to get through now should provide some support just as a number, even though there's nothing there. I just line up. Well, just looking at the hourly chart, there is a little consolidation right there, which is there's these bars that are overlapping right there, and just below it you can see. So that could be a pullback area, which would be a pretty small pullback, but the strength of this move suggests that is a possibility. One of the things that we talked about during this move up is as prices go up and we get bars that would suggest some type of corrective price action, which we saw, topping tail. Do they break a prior bars low? And they just continue to go up without doing that. And intraday, we got a break of a prior bars low, but that's just intraday. And so prices are going to open up for the Qs anyway, inside this bar. And they're underperforming right now. So they moved up so aggressively. I got this page working again. I have to update stuff. That they're likely to underperform. And so where are they here? 398.5. Well, a little bit below Friday's close there. So no damage done, but you get a run up like this, close below the open, the probability of breaking a prior bars low becomes significantly greater. And from there, how far it pulls back, there's just nothing to really of significance to stop it. But as I said, the good part is that the pullback based on the strength of this move wouldn't be a big deal. Traders are going to look to buy it. Institutions are going to look to buy it as long as it doesn't collapse. And at this time, there's little reason to think anything is going to collapse. The weekly is up quite a bit. It could just chop sideways for a while. So we'll see how it unfolds. S&Ps inside day, inside the topping tail so far. As you can see, they're moving up, and there is a void toward the high of that topping tail. As it came down, bottoming process begins to turn up, and we apply bar by bar analysis, pivot highs, pivot lows. It's consolidating, breaks out. What's going to stop it here? Well, that number of 4,700, which relates to SPX, which is a huge open interest in there, going out the monthly expiration. A lot of times those big open interest levels provide a reference point of price resistance, which just poked above it on Friday and came back in and basically closed almost exactly at that level. So what about SPX today? Well, assuming that this upward momentum is going to stall, there's premium at, and again, we always go to what would be the smallest premium at what would be considered a safe level, and meaning it's not going to get there. So 47.35 is where there is, you can go above that, of course, go a little bit more above that, but at that point it becomes, is the reward versus the risk worth it? So you've got, you have to get through Friday's high, which is 47.1850, and continue to go up. It's extended. Trading, a lot of trading is once you know patterns, support, resistance, relative strength, weakness, an objective measurement of extended. It's a probability game. Will prices go, in this case, go to that level? I think it's unlikely. To go to the downside, 46.60. Now, getting to 46.60, it really wouldn't be any big deal. It wouldn't harm this trend in any way, but to sell that as a put spread just really doesn't make sense. So markets are up a bit this morning, which helps the premiums up above there. The likelihood of sellers coming in, just based on this daily chart, using a 5 or 10 minute low, something like that, as some reference point of initial weakness, since this is moving up, that's good for selling that spread up above this level, because the premiums are going to stick there for a while, and you can make a decision as to whether you're going to do that trade or not. And I said 47.35. There's enough premium there to consider that as a trade for today. The Dow is already up there, right? It's outperforming this morning. It's already pushed up to Friday's topping tail or high there. So it continues to show strength. It's up at the prior high. As we always do, we look to the left, see if there's any reference point of, in this case, price resistance, and there is. Since prices are moving up here pre-market, typically what happens is it takes out the high. And so we still have, 20 minutes or so before the open. So this could continue to push up, but many times what you get is what we call that greater than 100% retracement, where prices would take that out, and then we'll see if it starts to roll over from there. And we're thinking rollover, some type of corrective price action because of the extent of the move. You can see it's kind of like a measured move there as that is moved up. You can see something that I covered in the letter, just to kind of show how the numbers relate. We just eyeball these measured moves and just look at them and say, oh, here's an initial move, it corrected, and here's another move where it started to correct. And we can see they're pretty close to the same. They're never exact, but pretty close to the same. Gives us a guideline as to, besides just prices having had a big run already, a guideline as to historically where prices often begin to correct just based on that particular measured move concept. Russell looks amazing. I mean, we're talking all year about this trading range. It's more clearer when we look at the ETF. But you can see, consolidating. I mean, it was going sideways at resistance and then breaks out with a wide range bar. So on a weekly time frame, it's what we call an igniting bar, even though it's a big bar, extend the move. And this is probably, if the others pull back, this would probably correct a bit as well, but should correct less since it just got moving. So buys on pullbacks, consolidations. The implications here after a year-long consolidation is that this can go significantly higher. And of course, common sense says it shouldn't go back down below the low of last week's low. Something would be wrong if that was to happen in the short term. Right? It's more common sense. Transports, big resistance. We look to the left. Maybe it could make a last move here. The The rails have had a big move. That's what helped drive this higher, and some of the other stocks that are in there. But the good thing is, as far as this maybe not pulling back very far, is that the airlines look like they're just beginning to get moving. And I don't think there's any cruise lines in this. Maybe there is. I'd have to go and look, but they also look like they're beginning to get turned around to help bring up the rear. Gold. I think gold can stay above 18,000. I think so, Steve. And I was just getting to that. And the reason is that this consolidation is pretty long. And, this type of a move, in 2020 hindsight, that it retraced this far and it's been retested. And similarly, somewhat similarly to what we talked about with the Russell, was that how things got tighter. So we spoke about, if you go back and look at prior videos over the last couple of weeks, where we talked about how, the Russell was whippy and how the moving averages got close together and how the pivot highs and pivot lows got close together. So Friday was a good day. Yes, there's all these pivot highs up here. But, as we look at this bigger picture, I do think, I don't know about it staying above 18,000. I think ideally it would, but it is at this resistance. But I do think that it should be able to get going at this point. Right, silver, down at the prior lows, and look to the left, and it's underperformed, but it should move up with it. Gold looks better. They both have resistance to deal with here. So I wouldn't think that they're just going to take off and run. Yeah, kind of a head and shoulders, right, which we can draw there. Some might say it's kind of messy, a messy one. Why white? Let's try some green. A little shakeout, minor shakeout within that. So this is your downside shakeout pattern where it goes sideways at resistance, which is bullish. Now it retested that, pulling back to support. So again, constructive, still has work to do, but to initiate small positions here, either silver or gold, looking for things to eventually get moving, I think makes sense. And oil, retesting, broke the lows. So it's violated its major support point. It's where a sell setup could happen, a lower high, and pulling back. The weekly, you look at the weekly, does make sense that it would correct. It's had a hell of a bullish move, but some kind of corrective process looks evident that it's going to happen. Bitcoin, retesting the prior highs, also had a big move. So, looking to the left there. Now this didn't violate any major support, but it's up against an area of major resistance. So chopping around here, going sideways for a while. Of course, that makes a lot of sense as well. And bonds. Well, yields, you can look at yields up here. Gapping up a little bit here, but started to pull back. And we've been talking about how the 5-year has been accelerating higher. And while the 30-year is chopping around. So there's still, this tightening of the yield curve, which, we talked about a week or so ago, that it wasn't a concern at this point, but certainly something we're going to continue to keep an eye on since, these have come down. And what we want to see, is this, rip right back up again. Otherwise, it's going to become something that is pointing toward eventually a recession, this is an inverted yield curve has been the only real high probability piece of information to point toward a recession. We're not even there yet, but it's something that we have to monitor on an ongoing basis. Otherwise, we're not going to be aware when it happens. And what else we cover here? 10-year, right? Pulling back to these converging moving averages, but really nothing to the left there. Little head and shoulders top. And so one of the things with the interest rates, the whole, well, we've got this supply chain thing and whatever coronavirus is appears to be behind us. But if everything is going to be turning around and we're supposed to see an economy start picking up, this really should be stable here or start to move higher rather, because if this continues to drop, that could be one of the reasons, other than the markets just being extended, why the markets begin to pull back. So, keeping an eye on the 10-year to see if it continues to drop here makes sense, even as an intraday trader as well as a swing trader, because I believe that it will be a reason why institutions will get a bit nervous if this continues to drop here. Wall Street Journal said many bond funds getting hurt. I guess, they do what's called a carry trade, where I'm assuming, Dan, maybe that's what they do, where they, buy one to fund another or sell one to fund the other. And this yield curve tightening up like that, where it's been wide, which makes it almost like free money. Certainly, and with big positions, they can't get out of them quickly, and they get hurt pretty bad when that begins to happen. The dollar. The dollar's been strong, continues to hold up here, consolidating. I think if that breaks out, it might not be such a good thing for the markets either. It's just from a techno-fundamental point of view. If the dollar starts going up, companies that do business overseas, their products become more expensive, and that could obviously hurt their earnings. And some of those companies might start seeing some selling. On the other hand, there's a lot of beaten down things. One of the things that I pointed out to with the weekend letter was some of these consumer staples. So take a look at Heinz ketchup. Some things that have really underperformed that might start to outperform as money gravitates or rotates from some of these leaders. Well, yours, Dan.
Heinz has a nice weekly. I saw KHC. Yeah, look at this weekly. Look at that double bottom retest, price void. Nice. Just got to work entries on the daily. Yeah, you mentioned a couple in the ETF letter, so that was helpful, pointing those out for folks. All right, so we have infrastructure bill passed, all kinds of politics going around that, but we want to see which ones are going to, as with any news, I didn't move it. Yeah, as with any news, we want to see which ones companies are going to benefit and which are going to get hurt. I'm not quite so sure the hurt thing really in this case, because they're just spend. But yeah, look at Kraft here weekly. That beautiful W bottom. So we got electric stations moving up. There was some news here of Regeneron again, another cocktail. I don't know if it's Argen or different one, I forget. Yeah, no, it's Argen. I have it right here. So that is, I guess, continuing the bullishness of the reopening Corona trade. No more Corona being gone. That started on Friday with Pfizer's. So I guess hotels, cruise ships, jets, reopening stuff. Milpo here, hotel. It's been lagging, of course, but if it goes to 1275, we get $1 out of it. Nothing wrong with that. Win I like, but it has earnings tomorrow. LBS. We have two positions on RCL. Those continue to look good. We had a put on UAL expiring at full profit last week. That's gapping up again. Of the Dow 30, yeah, cat is where the action is. Up 11 points here. So that's an infrastructure play, I'm just assuming. And Disney reopening trade up 275. Other than that, there's not much really going on in the Dow 30 here. I see Visa up 2 and change. Merck is down. You know, there's a lot of beat up stocks too. So Merck was down. Look at well, not Zillow got its head creamed in. But I want to watch these. Chug was another one, head creamed in, but that still looks like a short, poor thing. Can't bounce. Thomas, Elsid. Yeah, it's in our weekend letter. Yeah, it looks higher. Well, 1, 2, 3 on the weekly. IONQ. Gap's too big. This totally looks like a SPAC to me. You know, they're hovering at 10 bucks and then they come out and do their crazy moves. Yeah, it just has that footprint for sure. CHPT charge point. So this is an infrastructure charging thing. No great pattern. Blink charging. And it's, look at it, it's gapping up here right to the 200. So there's nothing to do with that. So people get excited about, oh, let's go buy infrastructure things here now. Well, give me an entry, give me a pattern. PPSI. That's what, I don't know if this is an infrastructure move, but look at that. It's double pre-market. It's off the top of my daily chart here. Plug. 40 bucks. It needs to settle down more. MGM, another hotel, gaming type thing. Now this is not a 1, 2, 3, but to me, it's the same amount of bullishness because it's still up here at the highs, but it occurred from a shock pattern as opposed to an igniting green bar. So I still like MGM right here. We'll put that in a window. Groupon, yeah, we have that as a put spread, or no, we have that as a long in the weekend letter. We have a lot of trades in the weekend letters here. I had a put spread on something else. I forgot that had earnings. EBGO, 12 bucks. It's just, you know, Janet, you're gonna need a big stop. You know, maybe if it goes sideways and takes out a 30-minute high, then you stop pre-market low. Oh, you're in. All right, cool. All right, CCJ. Yep, that's on our list in the weekend letters. That looks fantastic. UPST, I guess I'll go and buy the ticker, 341. It's not a textbook W bottom, but it's a retest. If it can get over Wednesday's high, 343, then it has plenty of upside left. Here, I'll put him right here. Look at this bottom right, AXSM. I posted this as a potential gap breakout. That's a bullish daily. Now pre-market, see, it was gapping to 45 bucks. Target would have been maybe 200. And then I noticed it's a bio. Look at that, 45 to 33 pre-market. No, thank you. MSOS is marijuana ETF. So, you know, this thing ripped into the close Friday on volume. So did MJ. So I read in today's paper that some senators are still pushing to legalize it, so I'm assuming that's what did it. We have a put spread on Tilray. Nice on Mesa. Yeah, Greg found that one into the close. Highland. 30-minute high, Janet, is gapping up here to Friday's high, the top end of the tail. Here's another infrastructure trade, 206, so it's gapping up $10. And it's bullish, but you got to be patient on the increase. I can notice this thing tanking pre-market. Wow, $24. What is happening with this? I can't even see $24 on these charts. That is ugly, ugly. We'll come back to it. And Cron. Yeah, at least Tilray held the low. Tesla, yeah, I forgot to talk about Tesla. Elon Musk, you know, him and his tweeter device, he loves creating drama and gaps. So I guess he tweeted out, hey, I want to sell 10% of my company. But I mean, we can talk about it later unless you have a quick answer. Why would him selling 10% fundamentally cause this gap down? I don't get it. I'm like, so what? Sell it. Unless he thinks, you know, giving that much control to somebody else is going to change the. I know, but my question is, why is it gapping down this much on that news? So we had a call spread on this, and it is gapping under our entry. I gave the entry this pivot right there, this 2 p.m. pivot, because then, you know, it's under 2 days, and it was deep into this WRB. So I'll keep an eye on it, boss. And I don't know, we just got to let it settle in. Pave. So this is infrastructure again. We can later on come back and scan those stocks in that sector. X will be a little infrastructure thing. McGraw gave me, and Cliff I gave as a put spread. And it's good to go. It closed at 44 cents, and I said, let's try to get 30. You know, it's an ugly buy setup, but I like the gap. TTD 84.50. Wow, yeah, that's a shock. Yeah, JR was asking about that also in YouTube. JR, the answer is definitely depending on the strike and the premium and the spreads and how many days to expiration. That's a big old gap. Very big gap. So that, you know, you got to let it settle down. Sample here, alarm went off. So 5-minute high. 5-minute high is a go on sample. Yeah, I'll get rid of AXSN, provided it's not excessive move. I had a couple alarms go off pre-market here. SSRM. All right, so that one's fine. 5-minute high also. This is a silver stock. So I got to go through these and see which ones are okay to take. Blade. This was favorable mention in Barron's. Come on, charts. What's wrong with you? I think, you know, I'm given this as a core with a really big stop. It's one of these